Okay, class, I just want to go over the quiz because some people did fine and some other students really struggled with the quiz, especially the ones that were worth 2 points. So I changed one of them to just 1 point and then I kept the other one just at 2 points. So quiz number 2, this is chapter 2. I just want to go over all the questions. So a predetermined overhead rate is calculated using, it's not the actual, right? Predetermined overhead rate is an estimated total overhead cost or rate, cost divided by activity, so total cost. So if we look back at our review sheet, let's see if this will come. So it's the total estimated overhead cost over a total allocation base, such as direct labor hours or machine hours, things like that. So this is based on budgeted amounts. So this is not going to be an actual, it's going to be an estimated. If overhead is underapplied, then, so if we go back to, if you watched the previous video about chapter 2 review, we see that there will be a credit balance if it's overapplied, a debit balance if it's underapplied. And so this is talking about underapplied. And so if it's underapplied, then our actual will be greater than our applied. So we didn't budget enough for this actual amount of overhead. So the actual cost is less than the estimated. That would mean the actual cost is less. That would mean you overapplied your predetermined overhead rate, so that's not correct. The amount of overhead cost applied to work in process is less than the actual overhead incurred. So the amount applied is less, so we underapplied it, yep, than the actual. Predetermined overhead rate is too high. That's incorrect as well, right? Because it was too low, that's why it was underapplied. The manufacturing overhead account will have a credit balance. If it has a credit balance, it will also be overapplied. And then the next question, it says predetermined overhead rate based on direct labor hours, estimate and actual data. So remember, when we're doing a predetermined overhead rate, it's the total estimated cost over the allocation base, right? Total estimated overhead cost over the total allocation base. So that'll be the 720,000 divided by 600,000 to get our predetermined overhead rate. So if we do that, equals 720,000 divided by 600,000, we get $1.20 per direct labor hour, right? And so that's our predetermined overhead rate. And we'll times it, what will we times it by? We'll times it by the actual amount of hours incurred, right? Like, just like our thing said, where does it say? Okay, so predetermined overhead rate is calculated at the beginning and times it by the actual allocation base incurred. So this is our direct labor hours, actual hours. That's 550 actual hours, 50,000. So equals this amount times by this amount. So that's our applied amount. So if we look back at our Excel sheet, that would be, oh, we're here. It would be on the applied amount side. And then we would compare that to our actual to see if it was underapplied or overapplied. So our applied amount is the 660,000 and our actual was 680,000. Oh, sorry, 680 from the question. Right there, actual 680 versus the amount we applied or calculated. And so we can see that the actual is greater than the applied, so we underapplied our amount by 20,000. So we actually incurred a lot more than we were expecting, 20,000 more. So 20,000 was underapplied right there. Next question. Gillette Corporation has $26,000 of raw material on hand. During the month, company purchased an additional $75,000 of raw materials. A journal entry. So they already have this balance of $75,000 raw materials. So over here they have $75,000 of raw materials already there, right? So that's their balance, $75,000 if you're only looking at this raw materials. And then they purchased, 26,000. And they purchased 75,000. So they purchased that. So that'll be a debit, 75,000, a debit, 75,000 of raw materials, and a credit, either accounts payable or cash if they paid it with cash. Which of the, so yep, right there as the question says, which of the following statements is true? The manufacturing overhead account is debited when manufacturing overhead is applied to work in process. Is debited when manufacturing overhead is applied as well. So we know that when we apply this 240,000 from our previous example, it's a credit right here. So we're debiting work in process and we're crediting manufacturing overhead when we do that applied amount of overhead. So that's incorrect. It's not debited, it's credited. Job cost sheets accumulate the actual overhead costs incurred to complete a job. So job cost sheets, actual overhead. So we never are gonna do our actual overhead. It's always gonna be the applied. So actual direct materials, direct labor, and the applied overhead. When products are transferred from work in process to finished good, it results in a debit to finished goods and a credit to work in process. So we had a debit to finished goods and a credit to work in process, as we see in that journal entry. So that is correct. C is correct. Selling expenses are applied to production using a predetermined overhead rate that is computed at the beginning of the period. So predetermined overhead rate is for your overhead accounts, and selling expenses are a period cost rather than a product cost. So that one's definitely not correct. The predetermined overhead rate is $50 per machine hour. Under applied overhead is $5,000, and the actual amount of machine hours is $2,000. What is the actual amount of total manufacturing overhead incurred? So 5,000 under applied. So we know we're going to have a 5,000 balance over here under applied, right? So this amount applied is going to be 5,000 greater than what 5,000 is going to be greater. The actual amount is going to be 5,000 greater than what we applied. And so they said the actual amount of machine hours is 2,000 and $50, so our predetermined overhead rate. So we'll do $50 times it by 2,000, right? So predetermined overhead, that's how we find the amount applied, right? 2,000 machine hours, actual hours times our predetermined overhead rate to see the amount we applied. So over here, we know that it's going to be 5,000 greater than what we applied because it's under applied. So we'll add these two together. Sorry if it's a little noisy over here. So 105,000 is our answer there. Job cost sheets contain entries for actual direct material, actual direct labor, and actual manufacturing overhead. That's false, right? Because we're doing an applied overhead instead of the actual. And finally, in a job order and costing, occurrence of indirect labor costs would be recorded as a debit to manufacturing overhead. So over here, we had indirect labor, right? And that was indirect labor goes straight to manufacturing overhead, and the credit is wages payable because you have to pay those workers that are indirectly working on the product. So I just want to end with that. That's just a review of the